$500,000 and it appraises for $775, the bank is going to lend me a percentage of the $775. What do I have to do? I got to come up with that other $25,000. So you guys, when you talk to your buyers, you should know how much money do they have available for down payment. Now, if somebody says I have $150,000 down payment and they come in pre-qualified for a $500,000 commitment for a loan, how big of a house can they buy? 650 is an incorrect answer. Stop it. Don't they have to pay closing costs? Don't they have to buy furniture? Don't they have to do all that stuff? Don't let them put every last dime they have unless they need to. Let them have a little bit of reserves. Is that wrong answer? No? Wrong answer? Yes, sir.
Do you have a recommended number for reserves? I would tell people, like, throw in an extra, after all the costs, throw in an extra $5,000 for a year.
6 months is good, but we don't require that on our owner-occupied properties. On investment properties, we want 6 months of PITI payments. So if you're buying a property as an investment, your interest rate's going to be higher because the risk is higher, but we also want to see a lot of times, if the PITI payment is $3,000 a month, we want to see $18,000 on the side. Hi, Christina, come on in. You can't never sneak in my class without me saying something. You know that. All right? Did I say what? Say the what? PITI payment. I'm going to make this very brief. I'll make this very brief. PITI payment. Principal and interest. That's what you pay back the loan with. That's your mortgage. T is for taxes. I is for insurance. Sometimes you have PMI, private mortgage insurance, or MIP, which is for FHA loans, mortgage insurance premium. If you're buying a condo or a co-op, you might have homeowners association dues or common area maintenance fees. That's your PITI payment. I'm going to talk more about that when we do the debt to income ratio a little bit later. All right? All right, so let's go back to loan to value. Loan to value is nothing more than what percentage of the value of the home have we borrowed. Are you leaving, Christina? Okay. So, knowing that we use the lesser of the appraised value or the purchase price, the handout that I gave you has 3 igloos on the front. They're all worth $100,000. The mortgage amount that's outstanding on them is on the bottom. I want you guys to take a minute and figure it out. You can use your calculators, but don't help each other, don't talk to each other. By the way, these calculations that I gave you are probably the simplest of the simplest of the simplest of all calculations. Should take 2 seconds to do it in your brain. Don't even need a calculator. That's how easy they are. Good. Good. How many people are confused and not sure what to do? Be honest. Good. I like that. What's your first name? I'm sorry? Jessica. Hi, Jessica. How long are you in the business? A year. Okay. Fair enough. What's confusing you, aside from the instructor?
I'm not sure, like, where to start.
Okay.
I have to divide.
All right, so I'm going to do something for you guys. Put your pens down for a second, and I'll see, Jessica, if I can help you out here. All right? And then I'm going to see if you can do the calculations. So the acronym for loan to value is LTV. The formula is loan divided by value. Are you with me? Yep. So tell me, what is the formula? Loan divided by value. What's the formula?
Loan divided by value.
Loan divided by value. What's the formula?
Loan divided by value.
What's the formula?
Loan divided by value.
What's the formula?
Loan divided by value.
What's the formula?
Loan divided by value.
What's the formula?
Loan divided by
What's the formula?
Seriously?
Yeah, seriously. Let's go. Come on. What's the formula? You will never forget it when you walk out of my class, ever. What's the formula?
Loan divided by value.
You say it like you know it, right? Loan divided by value. Now watch this. Jessica, what's the formula?
Loan divided by value.
Loan divided by value. Excellent. Remember, we're working and we're trying to bring everybody up to a certain level. So some of us get it and know it, but there's others that don't know it. I want to work with the people that are struggling to help make them better. Is that fair enough? So if you know it already and it's validation for you, fantastic. But the people that are struggling, we want to help them, right? So the formula is what, Jessica?
Loan divided by value.
So, which value do we use?
The house.
In a purchase transaction, we would use the lesser of, but I didn't tell you this was a purchase. I just said that's what the mortgage is, right? So if you know that that's the mortgage balance, what formula are you using? Loan divided by value. Which is the loan amount?
The 60,000.
The 60,000. So what would you put in your calculator?
Okay, so divide the 60 by 100.
60,000 divided by 100,000, because that's the value. Loan divided by value. That's exactly how you would do it. You were overthinking it. So go ahead and do that for me, and then tell me what answer you get. How did the Yankees not get that pitcher? I know he didn't want to do it. That's unbelievable. So what'd you come up with? So is your answer 0.6%? How many people say it's 0.6%? Okay, a bunch of people over here. Hi, how are you? What's your name? Linda, you look scared. Don't be scared. Would you like to put $1 on your answer, 0.6%? Let's see your dollar. I know my dollar's up there. I'll have to pay $1 if she's wrong. I'm getting paid. Send that dollar down here. Thank you very much. 0.6% is an incorrect answer. It says on your calculator 0.6. So if you remember from high school, 0.6 is equal to 60%. How do you get there? You take the 0.6 and you move it over 2 decimal places, or you could take 0.6 and multiply it times 100 on your calculator. Think about this for a second, and you will never forget this ever. I said earlier that loan to value was what? Nothing more than what percentage of the value of the home are they borrowing? So if the home is worth $100,000 and they borrowed $60,000, what percentage of the value of the home have they borrowed? 60%. It's 60% is the answer. Correct? Are you following me? You got me? Okay, good. Would you like to do the second one now and try to get your dollar back? Who said it was easy? What'd you come up with? 82.5% is a correct answer. Would you tell us how you came up with that?
Yeah, 82,500 divided by 100,000.
Because it's the formula. You just plug in the numbers into the formula. Easy. Very good. I like that. Perfect. Did I hear you say I want to bet $1 on my answer? All right.
They didn't ask you if I wanted to bet $1.
No, not this time. I only got $1 up there. I got to be conservative. All right. Number 3. Who's got an answer for number 3? What do you got?
125%.
Are you asking me or telling me the way you're saying it? You sure? 125%? Would you like to put $1 on your answer?
I don't have any money.
That's unfortunate. Oh, you have $1 over there to bet. You want to say 125% also? Yep. Okay, I'm going to take your bet. The answer is 125%. That's correct. How many people came up with a different answer? How many people came up with a different answer? For the third one. Okay. How is it possible to have a loan to value that's higher than the value of the property? So, is it possible that property values have declined in an area? That happens, right? Is it possible that somebody's in a negatively amortized loan? That's possible. So there are all those reasons, right? So somebody could be upside down. We would turn into a short sale in that particular case if somebody sold that house. That's a true statement. Turn over to the second page. You want to know about a seller's concession?
If you added that 120.
Yeah, that would, right, but it wouldn't, we don't do 125% loan to values, and even with 203Ks, we do 110% max. So nobody gets 125% anymore unless they're negatively am or they're upside down because that property value went down. Yes? Reverse mortgage is a negatively amortized loan. By the way, if you guys would like to see me back here next year, this is my first year training here. And the classes have gone, I think pretty well. I've enjoyed training you guys. If you'd like me to come back next year when you get those evaluations, let them know. And I train about 14 different classes that I wrote. Reverse mortgages, 203K, the mortgage process from A to Z. I do all of these types of classes. I write them so that you guys will have a better understanding of what's going on. If you'd like to have some of those classes trained next year, I'll work 3 days instead of 2 days. I'll have less time gambling and more time training. But I'll be glad to do that for you guys. Just let them know that you'd like to see more classes from me. I'll be glad to do that for you. I have a lot of them that are approved with New York State. All right, page 2. You got the Leaning Tower of Pisa. You have the lighthouse and the Chinese pagoda there. Go ahead and write down the loan-to-value answers on the bottom. No questions, no helping one another. You guys are working hard. Is this the only class that you've come to where the instructor has made you actually work